Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about market psychology around major levels of support or resistance. In this case, big whole dollar levels. Now, if it wasn't obvious enough, obviously the S&P has something going on at around 3,000. 3,000 is a huge psychological level. And what I mean by that is, as a human, we tend to like to make things simple, right? If I wanted to buy the S&P, I'm not going to tell my broker, hey, buy it at 3,001.25. I would rather just say, hey, buy it at 3,000, right? Just like when we're talking about cryptocurrencies, Bitcoin. Nobody says, oh, Bitcoin got to 10,127. No, they say it got to 10,000. We're psychological creatures in that sense, where we're drawn to things that make life easier, and that's going to be one of them. Now, when we're talking about psychological areas, they play a huge role in what happens in the markets. Markets tend to get chopped up around them. There's huge amounts of order volume that comes in around them, and it causes a really messy scenario. Now, there's nothing wrong with that, but you have to understand that that's likely going to happen at those major areas. So, as an example, if I'm looking at the S&P, and I know that we're around the $3,000 mark, we opened with a really nice gap down, but on a normal day, if we weren't sitting on 3,000, maybe this first candle, second candle, third candle could have ended up closing a lot stronger. They might have been able to close towards the high of the candle. They might have been able to get a lot more done. So that's what I'm talking about. Look at and notice that they did not close above 3,000. They closed underneath it. Closed underneath it. This one, bar 3, did close above it, and it was followed up by immediately closing back underneath it again. That's because they're just fiddling around with that 3,000. You have a lot of hedge funds. You've got a lot of funds in general. Everybody's trying to reposition around that major level of support or resistance. Whether it's swing traders, scalpers, monthly traders at a hedge fund, it's all got something going on around that major area, and you have to understand why those are so important. The same goes for stocks. The same goes for crude oil. It doesn't matter what market you're looking at. Always be paying attention to those major psychological levels. Things that move in tens, things that move in hundreds, thousands, 25s, halves, 75s, right? We're naturally drawn to those types of things. We don't, like when we're talking about, what time it is. Oh, well, it's a quarter to 12. 75% of the way, right? It has nothing to do with being 20.25. We're drawn to those natural things that make life easier, and this is no difference, right? So the S&P around 3,000 has been a mess, right? Now, would it be just as much of a mess around 3,020? Maybe not, right? It's a little bit of a different price. If it were at 3,025 or 3,050 or 3,100, the more pronounced the whole number is, the bigger of an impact that it's generally going to have on the markets. So those are the types of things that you need to pay attention to. And when you're coming into those areas, you've got to start being a little bit more careful, because things get a little bit sloppier than they normally would be. So S&P is out of the way with an example around 3,000, but, well, we got to talk about crude oil. For those of you who maybe missed it, crude oil has had, what would be not an understatement to talk about? Crude oil has had an absolute monstrous rally. You'll notice the percentage in the top. Crude oil is currently up 11.43%. It was on the backs of a drone strike on a major oil facility in Saudi Arabia. Obviously, we opened up with a pretty big gap. We closed yesterday, or in this case Friday, we closed down in the 54s. We pushed all the way up to 63.34 on crude oil before backing off. Now, same thing goes on here. What's a major psychological level? What stands out here? Well, 60, right? Massive level of psychological support. It's a $10 round number, and it's not something as strong as 50 or 100, but it's still, given the context that we've gapped up so high, so aggressively, we don't have anything else to work with, 60 becomes a valuable area of interest. And look at the response that 60 had, right? Draw a line across 60. We had support and resistance, broke down, support and resistance, support and resistance. Lots of stuff happening around that $60 mark. We even had a swing long that fired off right around that $60 mark. We were buying into that all the way back up again. Those are things that you can look for in those types of context. If the context lines up really well, and you can stack on top of structure, on top of good trade setup, on top of good candles, you add to that that plethora list, we're also on top of massive structural support. It helps that trade so much more than it would otherwise. And this is another great example of those whole dollar areas causing a little bit of trouble. Now, does it have to be futures or anything like that? No, of course not. You can look at things like stocks, right? Let's take a look at something like Apple, AAPL, right? If we look at Apple on a bigger picture, well, Apple's trading at a little bit of a different price. We're a little bit higher up on Apple, trading around that $200 mark. It's at $218.75, but guess what? That $200 mark is going to be a big area of interest. Right? Look at this on a weekly perspective and draw a line on 200. Well, that was close enough. Let's make this exact. Fine. Look at the response that 200 has had. Right? It broke out super aggressively, became basically the bottom of the day on that day that tested it, and the high of the day on the next one. Came back, already saw preemptive selling into it, more wick selling into it, wick buying into it, really choppy, sloppy, big gaps away from it, held it as support, held it as support, held it as support. Those are the psychological levels that you want to pay attention to. And again, other things like, let's say, 150, right? 150 is another level of interest. Well, I don't think I really need to talk about that one. I think that one's pretty obvious. But also, like we were talking about, 175. Right? Looking at those types of areas, 175. Notice the support that happened there. These things don't happen on accident, right? Remember, the markets, although they may be massively driven by computers, humans still program those computers. So inherently, it's still going to be trading with a psychological basis. And this is an exact meaning or an exact representation of what I mean by that. Most of the market volume comes from algorithmic trading. Fine. We all know that, right? But at the same time, humans still programmed it, and they still have those biases built into the programming, and these levels will still continue to hold. Go a little bit further out. Look at something like 125, right? Going into those quarters. Nice area of support and resistance for the better part of 2 months. When it came back a couple months later, it acted as resistance again. All of these things are things that you can add to your trading tool belt to help you find the best locations to find those trades. Something to add to your tool belt if you haven't been paying attention to them already, but just in general, something that you want to keep your eyes on. Those whole dollar areas, half dollars, quarters, all of those can be big, big areas of interest. So hopefully you found it useful, interesting, entertaining, maybe something you can add to your trading plan. That's going to do it for this one. As always, if you have any questions about it, feel free to shoot me an email, jbrink@slingshotfutures.com. Otherwise, enjoy the rest of the day. I hope you had a fantastic day of trading, and we'll see you in the next one.